This message comes from Capital One. The Capital One Venture X Business Card has no preset spending limit, so the card's purchasing power can adapt to meet business needs. Plus, the card earns unlimited double miles on every purchase, so the more a business spends, the more miles earned. And when traveling, the Venture X Business Card grants access to over 1,000 airport lounges. The Venture X Business Card. What's in your wallet? Terms and conditions apply. Find out more at CapitalOne.com/VentureXBusiness.
Welcome to Carpe Dime, a podcast about personal finance and everyday life. I'm Jamie Davidson.
And I'm Nicole Jackson from Financial Center. Thanks for spending your free time listening to us talk about how life and family affect us achieving our financial goals.
Today's discussion is all about cars. Specifically, should you finance your next car or should you pay cash?
It really is a big decision, and there's a lot to consider. So today we're going to break down the pros and cons of both options, give you some helpful stats, and share some tips to help you make the best choice for your financial situation.
All right, let's drive in, Nicole. Give some stats.
All right, so first stat is the average car loan term is 68 months for a new car, and it's 67 months for a used car. So whichever direction you decide to go, get it, it's nearly 6 years.
Yeah, I was kind of surprised by this. The new car, not very surprising. I could see that one. I was just kind of surprised that people are financing for 67 months on a used car, because usually when you buy a used car, it's 2 or 3 years old. So really you're committing, like you said, almost 6 more years to that. And the average life of a car for most people is 5 years. So We'll see about that.
The next one we have is the Kelley Blue Book estimates the average used car sells for 42% more than it did before the pandemic.
Yeah, we've actually seen the prices of cars go up from the pandemic. There was a shortage. Shortage continued for a while. Starting to see those prices come down a little bit, but yeah, used cars are much more expensive than they were 5 years ago.
Everything's more expensive than it was 5 years ago.
Absolutely, I know, right?
Houses,
eggs,
food, as I was going to say food. Yeah.
What else you got?
Well, the auto loans are your third largest consumer credit market in the United States.
I think number one would be mortgage. I'd have to figure out what number two is, but number one is definitely mortgages.
We'll have to do some research.
Yeah, so there's that.
And the last one I have is 50% of Americans purchase their vehicles through financing, which means your other 50% are made up of 3 different categories. You've got 38% that purchase with cash, about 7% that lease their vehicles, and the other 5% receive their vehicles as gifts.
These are surprising to me as well, especially the lease. I figured lease would be a little bit higher. And being a person that's never received a vehicle as a gift, I was kind of surprised it's 5%. Have you ever received a gifted vehicle?
I have, like a 98 Pontiac Sunfire for Christmas.
Okay, nice. Did it last?
It did all the way through college.
That's great. That's a great gift. So if you're in that situation where you can gift somebody a car, that's an option. And we'll talk a little bit more about that later on as we talk about other things throughout this podcast.
So, Jamie, what's the first thing we should think about when we make our decision or decide which way to go? Get it?
Yeah, I know. Left, right, north, south. Yeah. Well, Nicole, let's start with financing the purchase. And since it's the most common way people in the U.S. are purchasing their vehicles, we might as well dive into that, yeah?
Or driving.
Driving, yeah.
Yeah.
No diving, driving today, baby.
So what are the benefits, Jamie, of financing?
So when it comes to financing, the number one benefit, the reason why most people do finances, because it spreads out your expenses over time. It makes it easier for it to fit in your budget. So you can get the car you want and you can decide on what that payment's going to be. Another reason you do it, it leaves cash available for emergencies or other needs. Instead of paying cash, you've got that cash on the side in case something else comes up. Now, you yourself, do you usually pay cash or do you usually pay finance?
We normally finance.
Okay.
And actually, it's kind of like a combination. I'll put some cash down so that my payments later are lower.
Very good. It may allow you to afford a newer or higher end vehicle. So if we finance it, we can get that car. We might want a little bit more than the car we actually need.
Well, the average car payment is $735 per month on new vehicles, which I don't know about you, but that is more than my house payment.
That's up there for me. If I came home with a $735 car payment, I don't think my wife would be very happy. I actually got a new car back in July.
Yeah.
She doesn't know the payment, but she would not be happy. And I didn't get the car I wanted. It was just car we needed.
But she can be happy because it's not $735.
It is not. I'm going to use that number in my, if it comes up, I'm going to say, well, the good news is, honey, average is $735. We're way below average.
See, that's what's important.
Education, ladies and gentlemen, education, be aware. Another reason why you might want to finance a car is it can help improve your credit score when payments are made on time. That is the key word there, on time.
Right, because another fact that we can throw into this whole thing is your payment history makes up 35% of your credit score.
Right. 35% paying on time. If you can pay on time, you're going to see your score maintain or go up. Very good. So besides that, what else you got there?
Well, financing does have some benefits, but it's still a big purchase that does come with drawbacks too. Things like your monthly payment can be a strain on your budget over time.
Right. If you back to the budget. Keyword is budget.
It always comes back to the
It always
budget.
comes back to the budget. You have to budget so you're able to pay that bill and you can afford the car. Remember also when you're looking at that, not only the monthly financing, remember the other things you're paying for on that car as well.
Insurance,
Gasoline
gas,
or electricity. You know what you do?
repairs.
Yeah. Yep.
Another thing is when you fall behind on your payments, it can lead to repossession.
The repo man's coming for you.
Or lady.
I'm referencing a movie that was made before you were born. So I'm telling you, everybody, you're so young.
Oh, I'm so young.
She
The
is so
repo
young.
person.
The repo person comes for your car. Yeah. That's going to happen after 90 days of missing the payments on your car, usually. You don't want that to happen because what's going to happen is you're not going to have a car.
You're not going to have a job.
You're not going to have a job because you can't get to your job. And then you're going to go try to buy another car. And guess what they're going to tell you?
Your credit's too bad.
Credit's too bad.
Because you've missed payments.
So hop on the bus, Gus. Any more drawbacks?
Well, yeah, you'll pay interest, which increases the overall cost of the car. So you think you're paying one amount, which is what you finance it for, but
Right.
then you've got all that interest that accrues monthly on top of your payment.
And actually, if you look at your bill, a lot of your bills will show you how much is accrued over the year and over the time. That's the number you want to look at. So when you are out purchasing a car for finance, try to get the lowest interest rates you can on that loan.
And the last drawback is that your car depreciates quickly. I mean, your car loses its value as you drive off the lot, and you lose about 20% of the value in the first year.
Right. So let's put that in numbers. So if I buy a $50,000 car, I'm going to lose 20% of that value in the first year. So that car is only going to be worth $40,000. But I can tell you, I probably have not paid $40,000 down on that loan. And that's where in the business, they call that being upside down on your loan. The majority of Americans between year 1 and 3, they're pretty upside down on their auto loan. And if you decide you want to go buy a new car, guess what? You just roll that upside down into the next one, which is not a good thing. So yeah, make sure you're paying attention to that. We talked about cash down payments allows paying it down, and there's different ideas out there.
Yeah.
We don't have the exact right idea, but the answer is if you're going to finance it, get the right price. Don't get talked into the things you don't need. Try to get the lowest interest rate.
So another option would be to pay cash, right?
Right. We're going to pay cash. What are the benefits of paying cash?
Well, if you pay cash, you have no monthly payments to worry about.
Right. Because you paid it all up front, right?
Yep, all paid off. No,
All paid
no
off.
problem.
Yep. And you can take that money that you use and start putting it back into the savings.
Exactly. Because you're saving money every time you get paid and all
Right.
that. So it's going to build up quick, right?
Yeah. Not only that, what else?
Well, you save money in the long run because you're avoiding that monthly interest and the finance
Yeah,
charges.
you're not paying that 6% on that loan,
Right.
Actually, you can put that money into some kind of savings and earn a little bit of interest. So there's a double win there, yeah?
And full ownership is yours from the start of getting the car. So you have your flexibility. You can sell it if you decide you don't like the color, or you can modify the car later, put on some of those flashy lights. I think you'd be a flashy light guy.
You see me as a flashy light?
Yeah.
I don't think so. My last car was brown. I don't see. my current car is white. Flashy is not me, I don't think, So, all right. So yeah, those are some good benefits, but there are also drawbacks. Number one, it requires a significant upfront investment, which can drain your savings.
Which is bad because if you don't have your savings, then again, you're kind of stuck if anything goes wrong.
Water heater pops, you have to put a new water heater in, it's $2,000. Where are you going to get it? If you don't have savings, you got to go to credit card. Credit card is going to have higher interest rate than an automobile, right?
Right.
Okay. It limits your purchase options if savings aren't sufficient. So you may not get the car you really want,
Or the color.
the color. But then again, maybe you're going to get the car you should have. That can be sort of a catch-22, a good thing and a bad thing. Another drawback is it's going to require careful planning to ensure you don't overextend yourself financially. Once again, if you're draining your savings account and something happens, you don't want to be overextended.
Don't have that safety net.
Don't have that safety net. Everybody likes to have a safety net. Do you have a safety net?
I do. Yeah.
So
A couple safety nets.
that's good. I like that. Savvy savings, putting
Yes.
it in different places, hiding your money, but
Mhm.
not underneath the mattress, right?
No.
All right. So we've talked about financing. We've talked about paying cash. Let's talk about the idea that you have another car before this that you have, and you're going to get a new car. Should you sell or trade in an older car? So why would we sell or trade an older car?
Well, you would sell or trade in your older car to reduce your maintenance cost on your current car
Right.
for the cost of repairs, the cost of insurance, be a little more fuel efficient.
My last car that I had, the reason we got a new car was because the cost to repair it was worth more than the car itself. So it was like, didn't want to go buy a new car, but it didn't make financial sense to not go buy the new car.
Right.
Because this car kept having repairs, and the value of the car
Was depreciating.
was depreciating. So yeah, absolutely. Another reason is it helps offset the cost of your next car, especially if you own your current vehicle outright. So here we are now. We've got our car. We're going to go out and buy a new car. We can sell it. We can trade it in. We can gift it.
Damon is going to be 16 soon. So
your son's going to be 16 soon. So you better think about gifting.
another reason you might want to sell or trade your old car is if you might have outgrown or undergrown your current vehicle. Say you have a couple more people to tote around, or you can finally get that 2-seater that you always wanted.
You need the 3 rows, or do you want the 2-seater, right?
Right.
Yeah. So
basically your car doesn't meet your needs
you have to
anymore.
upsize or downsize, right?
Right.
Yeah, that's another reason to do that. And another reason is it could lead to better interest rates if trading in during a high resale value period. We see this a lot during the holidays. They run a lot of interest, APR specials. So instead of paying 6 or 7% on the car, you're paying 2.9. So you can get that car you want, and you're going to pay a little bit less in interest. But once again, goes back to the budget. What is your budget? Can you afford it? You're always going to go, oh, I can pay $20 more, $50 more. Think about that over the long run.
Do people trade in their cars so that they can get a lower payment? Is that a thing people do? Like, you're like, oh, I'm paying so much for this car, but then you see that the car dealership is running that 0%, whatever. And then so that you go trade in your older car to get a newer car, but then you're paying less on the newer car just because you traded in. Is that a thing people do?
That is something you could do, but remember, if you only owe 2 years on the car you traded in and you just traded in for a 7-year loan, you've added 5 more years to your debt cycle.
I guess that is.
Yeah. It'd be nice if it was 1 for 1, though, wouldn't it?
Yeah, that's why you talk things through, right?
That's right. Okay. So as we talk about this today, there's a few things that we want you to have that are key takeaways. One thing to think about, no matter how you plan to purchase your next car, is that you should go into the purchase well-informed. Meaning you should
know your budget.
Always know your budget.
Which includes the final purchase price or monthly payment.
Absolutely, yes. Know when to walk away from an offer. Guys, that car you're buying, there's going to be another one down the street.
It's the last car ever.
It's the last car ever. Never rush into buying a car. Take your time.
There's not another pink bubblegum car out there
Yep.
for me.
Okay. What else?
Know your list of must-haves or wish list items to avoid that large upsale purchase and expenses.
Yeah, I think this is one of those ones where we've sort of been spoiled now. You and I were talking before this, we want those heated seats.
Or the cooling seats.
She wants the cooling seats. I know nowadays they're doing heated steering wheels and cooling steering wheels. So is that a want or is that a must-have nowadays? I don't know. What else?
Remember that purchasing a car is a large purchase, so you have to take your time to make the decision. You can't be all loosey-goosey.
You don't want to be fast and furious in the ditch.
Ooh, that's a good one.
That's a good one, yeah. All right, let's talk about financing. Why do we do the financing? Well, because it spreads out the cost, but comes with interest and depreciation. So you've got to sort of weigh that. Hey, it's going to lower my cost, but I'm going to pay more over the long run because I'm paying interest on that, right?
It can also allow you to afford a more advanced or high-end vehicle. So you can get those cooling seats.
Yeah, that's how you can. Now, let's talk about paying cash. Why would I pay cash? Because it saves money in the long term, but requires upfront planning and savings, right? You're sort of spending your money now. You're spending less over the long run, but you've got to replenish that money.
And you own it from the start.
Yep, that is a benefit for sure. Selling or trading in. Why would I sell or trade in my car?
Well, I mean, you can lower your costs because you're doing a trade-in, and you can make it easier to upgrade and more accessible.
Very good. Yeah. It's those days from going from the SUV to the minivan, back to the SUV. Now I'm going to the Porsche. I like the 4-door Porsche.
4-door.
You seen those?
I think
those
so.
are really cool.
My kids really like to drive by the dealerships and be like, "Oh, look at that orange one," and I'm like, "It's just a car. Just I'm trying to
just a car.
Let them know
it's not just a car.
You have an orange Hot Wheel at home.
Yeah. The key to that though is, let's be honest here. I can't afford a Porsche. If you can afford a Porsche, that's great. Go for it. But that takes us to my final thought about knowing your budget. Stay within your budget. Understand your needs. Probably don't need a Porsche. Take your time making that decision. A car is a big purchase, so make sure it's the right fit for yours and your family's financial goals. Carpe Dime is presented by Financial Center First Credit Union. It's produced by Jamie Davidson, Nicole Jackson, and Garrett Rude.
Financial Center is an 8-time national award winner in adult financial literacy, and our goal is what, Jamie?
to help you improve your financial life. To learn more, visit us at fcfcu.com.
Like what you hear? Subscribe to us on Google, iTunes, SoundCloud, the All Indiana Podcast Network, and Spotify.